All right, today we're diving into an industry that's, well, about as certain as it gets, but we're looking at it through the lens of an investor. This is all about Service Corporation International. You'll hear me call them SCI, and they are, without a doubt, the giant in the business of death care.
So let me ask you something. If you were on the hunt for an investment that just doesn't care about recessions or market crashes, what would that be? I mean, something totally non-cyclical. It's definitely not tech, right? And it's not retail. The answer lies in an industry that most people don't really think about, but its customer demand is, well, it's literally guaranteed. Yep, we're talking about the death care market. And get this, in the United States alone, we're looking at a $27 billion industry. So this is not some small niche thing. It's a huge, fundamental piece of the economy. And its growth is steady and predictable, driven by, well, demographics.
Okay, so within this massive market, there's one player that just towers over everyone else. Let's get into the industry giant Service Corporation International.
So what's fascinating here is how this market is structured. You can see SCI as the clear number one, with about 16% of the market. But look at that giant chunk of the pie, 75%. That's all small, independent, family-run businesses. Now, if you're an investor, that 75% should make your ears perk up. It's a massive, wide-open opportunity for consolidation. And guess who's in the driver's seat to do that? SCI.
So, how does a company like SCI keep its lead and deliver such steady, reliable returns? Well, it all boils down to a business model that is just incredibly predictable. The secret sauce, really, is a concept called pre-needed sales. This is the absolute foundation of SCI's financial strength. It's exactly what it sounds like. Customers arrange and pay for their funeral services way in advance, sometimes years, even decades. This isn't just about planning ahead. For the company, it's a powerful financial engine. And just look at the scale of that engine. We're talking about a pre-need sales backlog of around $15 billion. Let that sink in for a second. That is $15 billion in future revenue that is already locked in, guaranteed by contracts. It's like a massive financial cushion that gives SCI a crystal clear view of its future income, something most companies would kill for. So let's quickly walk through how this actually works. It's pretty straightforward. Step 1. A customer pays for their services in advance. Step 2. That cash doesn't just sit there. It goes into trusts, where it gets invested and grows. And then step 3, and this is the key part, SCI only counts that money as revenue when the service is actually delivered, which could be decades down the road. That time lag is what creates that amazing predictability we keep mentioning. Okay, so you've got this super predictable business model, but on top of that, SCI has built up what investors love to call a moat, a set of really strong competitive advantages that keep rivals at bay and protect their profits.
And that moat is deep. First off, their sheer size gives them buying power that the little guys just can't compete with. Then there's their national brand, Dignity Memorial. In an industry where trust is everything, that name carries a lot of weight. They also have a massive 4,000-person sales team focused just on selling those pre-need contracts. And finally, trying to compete with them, especially by starting a new cemetery, forget about it. The regulations and the costs are huge barriers. It all works together to create this really powerful protective wall around the business.
But, it's not a completely perfect story. There's a major shift happening in the industry, a big headwind that even a giant like SCI has to navigate very carefully.
And that big challenge is cremation. More and more people are choosing cremation over traditional burial. From a business perspective, that's a problem. Why? Because cremation just costs less. You can see the numbers here. It means lower revenue and smaller profit margins for every service. And this isn't a small trend. The cremation rate is expected to jump from about 62% now to over 82% by 2045. You just can't ignore that. So, the million-dollar question is, how is the biggest player in the game dealing with this? Well, the numbers right here tell a really interesting story. Let's look at Q2 2025. The number of services they performed, the volume, actually dipped by 1.5%. But, and this is the important part, the average price they charged went up by 3.1%. So what does that tell us? It shows they're successfully fighting back against that trend. They're doing it by raising prices and selling more add-on services, like celebration of life events. They're proving they can still grow the top line, even when fewer services are being performed.
Okay, so we've got a stable market, a predictable model, a wide moat, and a clear strategy for handling the biggest challenge. So what's the actual investment case here? Let's break it down.
Well, what's really cool about a company like SCI is that it can appeal to different kinds of investors for totally different reasons. So the real question becomes, what kind of investor are you?
Let's say you're a value investor. You're looking for solid, tangible assets. Well, here you've got predictable, recession-proof cash flow. You have that massive $15 billion backlog of future revenue we talked about. And you have a huge real estate portfolio. We're talking almost 1,900 properties, many of which are probably worth way more than what the accounting books say.
All right, what if you're an income investor? Then it's all about that dividend, right? SCI has a super clear policy. They pay out 30 to 40% of their earnings. And because the business is so stable, that dividend is about as safe as they come. Plus, they have a great track record of growing it, so you're getting a reliable and rising income stream. And finally, what about the growth investors? You might think this is a slow and steady business, but there's a real growth story here too. It's driven by two big things. First, you've got the huge demographic tailwind from the baby boomer generation aging. And second, remember that 75% of the market is still independent? That's a massive runway for SCI to keep buying up smaller players. It's why management feels confident targeting 8 to 12% earnings growth every year.
But there's always a but, isn't there? The market isn't dumb. It knows all this stuff. This quote really hits the nail on the head. Because SCI is such a high-quality, stable business, its stock usually trades at a premium. You're paying up for that quality.
And that really brings us to the final, critical question for any investor looking at this company. You've got this incredibly resilient, recession-proof business with clear paths to growth. But it comes with a premium price tag. So is that stability, that predictability, truly worth the extra cost? That's the decision you have to make.